Now, I'm going to start with the dreaded S Corp. A lot of you who follow me and hear me talk, I often say it's not my favorite. Does it have its place? Yes. I absolutely think S Corp works for many. And you're going to hear from many speakers today who may tie into that, share one or two stories or an example of what strategies can go well with an S Corp. I don't 100% hate them, but again, they're challenging. And I'm going to share some of the examples that I've seen this past tax season just to make it relevant. All right, so let's get into it. Of course, our disclaimer, this is not tax advice for you personally, etc. But I know I'm speaking to professionals and you know of our disclaimer. A little bit about my background. You know, I've been speaking a while on tax topics. I've done things as real estate related. Should I sell my home or should I rent it? And talking about extraordinary strategies because we don't want to be ordinary, and teaching you how to plan and so forth. I talk about natural disasters and many other topics. So I'm qualified. And yes, the IRS has given me their thumbs up as well as NASBA for live presentations. So I'm pretty much going to stick on this slide. I don't really have to go through, many slides. As I say, we're speaking to professionals, but as you know, professionals are not perfect. And what I find when I created the platform is when we're teaching other professionals, or they take these courses on planning, they take courses on representation, but a lot of them don't really understand a lot of basics when it comes to taxes. Some of them, I cringe when I look at the preparation of the return that came in with the problem, and it hurts particularly worse when it's an EA, a CPA, or a JD. People who've put years of studies and skill into what they're doing, and they still prepare incorrect returns. I'm trying to tie the whole thing together so we get a better understanding. So I'm going to talk a little bit and introduce why an S Corp in the first place, why people choose it. I'm going to show you the objectives and make sure we hit all of them. We know about the eligibility, but we're just going to briefly go through what those are. We may analyze a tax return. I may change it into a little, hey, what would you do when I show you some of the examples from tax season. There's late election, of course. Sometimes we have to, wait a minute, maybe 2 years ago, I should have been an S Corp. And they heard it on TikTok, might as well be an S Corp, right? So we're going to talk about that, some of the state issues that come out of being an S Corp. What does the bookkeeping really look like? So I remember when I came into taxes and I started trying to figure out, do I start over? Is this a new entity? What does my books look like? So we're going to touch on that a little bit. Tracking basis, always fun. Setting up the payroll, accountable plan. Will we get through all of this? I don't know. I'm going to try, but we have 15 minutes. And if anything, at least want to plant the seed so that you will go and do further research and make sure you fully understand this before we plan and before we represent, because we could make it worse. Seen it. Okay, so understand the basics for resolution and representation work. So when we do resolution and representation, as I said, analyze that tax return, but I always tell clients, what are your goals? I ask them first. I have to understand, what are you trying to do? Because that should dictate, not the tax. A lot of people say, I want to save tax, I want to say I'm paying too much tax. But yeah, you can't understand staying on payroll. So you know what? No S Corp for you. I'm going to revoke your S Corp. I'm going to put you in the corner and you're going to sit there for 5 years because you can't elect it again for 5 years. So they don't know how to behave with that. All right. So who should do the tracking of the basis? Technically, it is the taxpayer's responsibility. But we already know they're not going to know. A lot of you have software, just flip the switch and start tracking the basis because it will help the tax practitioner, the client in the first place. And what's going to happen is they're going to come to you eventually and ask you, what is the basis? What is that? I don't know what that is. And especially when they get ready to sell or do something else and changing their setup. Now, payroll and reasonable comp. We have to discuss that when it comes to S Corp. Because I've seen this where they're telling you S Corp is best for you. You're paying too much self-employment tax. Let's elect S Corp. And then they go on their merry way. They ghost the client. The client comes, I'm supposed to be on payroll? Okay. And so how do you come up with reasonable compensation? So there are tools. You hear different, some people just say a third, meaning a third payroll, a third in my expenses, and a third something else, right? Your distributions and so forth, and that the IRS will leave you alone. I've had a plastic surgeon client paying himself $30,000 a year. Like, what hospital would hire you at that? I'm sure you wouldn't, but they commingle, plus they owe the IRS almost $500,000 already. So you can see the bad habits. And all the time, all they're trying to do is save tax when they should just have a quality plan and minimize the tax instead of not filing, mingling and trying to deduct this and that and the other thing. Some of them are not paying into the system for Social Security. I get it, but that causes the problem. All right, accountable plan, that's fun. So every time you say you have accountable, that's one of the first things I ask as part of a nice tax planning strategy. Because the idea being this, when you're in business in general, sole proprietor, SMLLC, S Corp election, you want to convert as many personal expenses into business expenses as possible legally. You're already paying the mortgage or the rent. Can we get some home office? Might as well, but let's do it the right way. Can we, my kid want to go to the prom. So how can I get money into my kid's hands? Oh, do this in the business or do that. And then we have Timlin who's going to speak on that a little bit more detail of a good way to do that and document properly. And that's getting money out of the business legally. But they have to do something legitimate and so forth. So we need an accountable plan. These comminglers are coming in and they need to get money out. And so, we need to get money out of the business, so you do a reimbursement. When you're a corporation, and some people think it's only S Corp, but C Corps too need a accountable plan. And by the way, C Corps need reasonable compensation, and a lot of people don't know that. I'm like, why wouldn't you know that? So the C Corp is trying to do the opposite of the S Corp. The S Corp wants to keep the salary as low as possible to save on the FICA. The C Corp is trying to make the salary as high as possible to not pay double taxation, so they don't have to take out a dividend. That's the difference. And so some of them pay whatever they want and so forth. No, but it has to make sense and be in relation to the task you're performing in the business. Now, at the end of the day, we might say, a lot of them come into my business and they surpass the benefit of the S Corp, and it's time to revoke it. When you revoke an S Corp, what happens? What kind of entity are you? You're automatically a C corporation. You're automatically a C corporation, and if you don't like that, you're going to have to file 8832 to switch you back to SMLLC if that's what you are, or MMLLC, or something of that nature. So be careful of revoking it, and be careful of the timing of some of these things too. When you elect the S Corp, it has to be at a certain time frame, and otherwise you're going to find yourself filing 2 sets of tax returns. Hey, I did it in June, but January through June, I'm a Schedule C, and then from July through December, I'm an S Corp. So now you have an extra tax return to do. And now you have to balance out the numbers. Where did you earn what, when, where, and how, and all of that. And it's just too much. So timing is everything when these people do this. So I want to take a pause so that we take this off and I can get my laptop. And I want to ask you some specific questions about S Corps. Yeah. Sorry, guys. It's kind of hard when you don't have your notes. It really is hard. Because, I want to remember I hit everything. But so I'm might be out of order. So, yeah, you can tap me later. It's okay? Okay. So, should I just unplug it? It's okay, right? Yeah. Yes, I mean, I may come back and show the summary page just to make sure we hit all the things, but just I want to take my examples. It's gonna you can now because yeah, this is part is done. Oh, sure. Okay, so we're at 20. Yes, no problem, no problem. Do you have a space? That gave you a space? You're fine? Okay, okay. As long as you have your Wi-Fi. Oh, I'm hearing that this is kind of loose, this table. Can, yeah, if you can be careful. I was going to ask Timlin if I give you some numbers, if you can write it, but just be careful with that. Yeah, there's the. So I shouldn't be more than, they are? Oh, God. So our timing. So I need to be in 50 minutes. So how good am I? Am I good? I can put maybe, I'm going to try to do 3, but we can always, we'll be fine. All right? Yeah. I'm only saying that for the IRS reason. So that I just want to make sure people get their credits or whatever. All right. Let me see. And by the way, there's no right or wrong. If somebody wants to be a C Corp, knock yourself out, be a C Corp, right? I'm just saying, you can be a C Corp, but let's think strategically is where I'm going with it. Or let's think representation side, is this gonna cause you problems? You know what I'm saying? So that's my point. So a little background, okay. So, all right, so no, so the background is restaurant, takeout, a takeout restaurant. I would say been in business since 2014. This is the Baltimore area. Gross receipts, 130,865. 130,865. Interestingly enough, okay, you see how it says 2014? I think she's been in business before that, but whomever elected her in 2014 to be an S Corp. So just to clarify that. Reasonable comp, comp, for the one officer, one shareholder, 14,400. All right, counting cost of goods sold and all of that, I'll just skip all that, just make it all her total deductions, 78,642. Ordinary income, so the net profit, $390. Net profit. And you can ask me for more information if you need more information to decide. This that Timlin is showing you is from the 1120S. So I'm looking at a 2017 return because She came in as a representation client. She owed the IRS $35,000-ish. No distributions. No distributions. At least, if they were, it's not on here. So let's clarify that. So we'll go with none. We'll go with none. She came in as she owes IRS $35,000. I'm trying to remember. It's under her personal social security number that she owed the $35,000, not the S Corp. The S Corp didn't owe anything, as we know. But it could if it had like late penalties and so forth adding up. Elect S Corp or no? This was such a bad idea. And when I first look at it, even worse, she has, at the time, 2 EIN numbers for the same entity. Come to find out, it's really 3, because the third one has a Maryland problem. So she has a Department of Labor problem on the third EIN. Mind you, she had 2 1120S's that year, 2 different EIN numbers from the same practitioner. I'm trying to see if it was a CPA. Doesn't say CPA on this, but I'm almost sure he is. And the thing that's sad is she's clueless. All she has are notices, and all she keeps giving me are notices. And so how am I going to unravel this problem? So I'm not going to tell you, and I told you a lot of the errors now, but back then when I first came to her, she owed $35,000. That's what I knew under the Social Security number. I called the IRS and I'm like, okay, what's the story here? Turns out the 1099K is in her Social Security number. So here's the other problem. You're electing S Corp and you're not advising the client, you have to change all of these things over so that the income gets reported to the entity and not your Social Security number. That was a huge problem. Yes. So by the time I finished that case, this particular $35,000, she got a refund of $3,500, which by the way, I think is still sitting at the IRS. Because she has a CPA doing her taxes. I don't do her taxes. Well, we inherited it now. Olga and I inherited this now because I said to the other CPA, why don't you just give it to me? Because she said, oh, never again will I have problems. And then guess what? I left them and she's out of compliance for 4 years. So now when I pull the transcripts, I see the $3,500 refund still sitting there. I have 1099Ks and Social Security numbers, nothing is in the EIN. By the way, I dealt with the underreporting unit. That's how I was able to show the 1120S with the tax already paid on that income. And so they were gladly, it took 2 years, probably because it was pandemic year that I got her case. So it took 2 years, but she got her refund. Well, it's sitting there as a credit. So now we have to. So sometimes you sit and you twiddle your thumbs because, I don't know, I don't know about you, but sometimes I go to sleep, it takes me 2 days and I'm like, this is what I'm gonna do. Because sometimes you don't know what to do. It's like, where do I start with this case? This poor lady. You know what I mean? And so we're trying to figure out how to unravel. But I go where the fire is really hot, and that is Maryland right now. Because she feels she's gonna get shut down. I did a walkthrough. Olga's like, do you really want this client? I know, but again, here's the heart, right? It's your community. It's somebody you're trying to help. She happens to be Jamaican, as a matter of fact. She cooks at her little restaurant, and this is where I feel she's willing to pay, and that's the thing too. She's willing to make the payment, and she just wants to catch up. So I told her CPA, why don't you just give us the case? Let me just fix it, because he's doing part, I'm doing part. It's a mess, and he's spoiling her too because she doesn't have bookkeeping. I should show you the bag of cash register receipts that I get. It should be, and it's to do sales tax reports. So she's behind on her sales. So you can see every month there's a late sales. Again, I'm saying this to show you all the problems when I'll just elect S Corp. and then don't help the client implement. And she's paying way more taxes than had she just sit in her little single member LLC and pay her self-employment tax, because her fines and penalties are ridiculous. So that was one. Let me see if I can give you another good one. Who, you had a question, anybody? I can, go ahead. Go ahead, I'll repeat it. Write it on the piece of paper, I'll repeat it. You want me to, Timberland, you want to read some of those? I put you to work.
Well, I have a lot of questions about this case, but
Yeah, I know, isn't it crazy? We get them all the time. You pick the first one. So if they pay you, so did you pick up her question, or should I repeat it? So all the way to the beginning, or you're going to do that client a disservice. There's no reason for the client to pay tax if they already did. So yes, very much so, back to the beginning. Okay, so we already know the Schedule C filer is the most audited of all taxpayers. The C Corp gets audited quite a bit too. This S Corp is pretty much in a safe zone, except certain things are kind of popping up now, like the no basis, no tracking basis, no reasonable comp, no accountable plan, because they know people are trying to learn tricks around that S Corp. But in the C Corp, so Antonio and I happen to be in a C Corp audit right now. The client had no reasonable comp, but guess what? Paid buku dollars on a $749,000 distribution. So some of it should have been reasonable comp at a lower rate than that, because that double taxation. The C Corp paid it, and then it went over to the 1040 and he paid taxes again. Somebody, I don't know if it was him or somebody was smart enough to make him a C Corp, in my opinion. He grossed $5.4 million that year. And I don't think, so what do people misunderstand about the S Corp? Yes, you'll save on the self-employment tax to an extent, but not the income tax. They're not looking at that income tax rate that's going to happen on the 1040 side. I have clients in S Corps in a higher tax bracket than the flat 21%. That's the problem. And they're not doing anything to lower that taxable income to bring the rate down.
so this person said,
Who said that? Correct, but you only have to do them if their assets are 250 or greater, and or gross revenue. Gross revenues have to. So I have done that, believe it or not, when they're clueless about their balance sheet. Then I say just leave it off, and we have to fix that though. You cannot stay in this practice and not fix this balance sheet. So, okay, how do we do that? And practitioners differ on this, but the IRS actually accepts estimates as long as you make sense, right? It's coming from a logical place. So here comes our friend. Listen, I went to a 2019 IRS tax forum. God bless you. I went to an IRS tax forum, and Frank Agostino, if you know him, he's an attorney, one of the best presentations I ever heard. He introduced that 8275 because he asked the question. If the client comes, here comes their Ziploc, shoebox, whatever. Do you turn that client away, or is this a teaching opportunity? Granted, not all of us want to deal with that, so you can just send them down the road to somebody else, or you can help that practitioner, that client. Here's a teaching moment, but they have to be willing to do the right thing going forward. So in a representation case, you have to plug the front, put them on payroll, set them on bookkeeping, blah, 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 do all that. So going forward, beautiful. And then we go back and we clean up so that when we finish, we're meeting a nice situation and not new problems. So otherwise, right? So on the cleanup side, you're taught to, okay, if it's a restaurant, restaurants at this size, in this location, gross this. They have reports out there that average this stuff. If you made $100,000, advertising tends to be 2% of that number. Hey, marketing is 5% of that number. Taxes tends to be this. And it's logical, unless the IRS has a valid reason to say thumbs down, you are in good shape. They will accept your estimated returns. And now, or yes, your tax returns, but you have to disclose that you're estimating. And if you get audited and they say, no way, 2% advertising or whatever, your 8275 at least prevents accuracy-related penalty. Because what's the worst thing it could say is, no, you can't deduct that. And then you get into your installment agreement and you fix your problem. All right? But you show credibility by doing the right thing going forward. Mister, I messed up. I own that. Did you know we're in a voluntary compliance system? People always forget that. It means we're going to believe you unless. And you have to do the right thing, and then you're showing credibility, and testimony is evidence. Right? Right. So that, The IRS thinks they're always like, yes. So the IRS sometimes, but again, who works at the IRS? People. You're going to hear me say that over and over again, because it's going to be what that agent thinks, or that agent's going to think differently, or this one is going to think differently. That's why the people skill is so important when you're doing representation work and planning work for that matter. Yeah. Yeah. Who is responsible for tracking basis, the client or the tax pro? So we had said, good morning, welcome. We had said the client is responsible, but they're not doing it. So at a minimum, the tax pro should advise, but most tax softwares or quality ones track basis. So just flip the switch and start tracking the basis. Yes, I would charge to track basis. I would. It's additional work when you're doing a corporate tax return. We all know that. Okay, so I've addressed those questions. Let me see. Can we pause a second? Let me get another example. And I know there are a lot of questions on that first example. And there's just so many. They're so juicy, some of them. I'm just like, which one can I tell you about? Here's a good one. I fired this client, though. I fired him for different reasons. Well, Lynette will know. Lynette worked on this guy. Yes, I'm going to give you some numbers. I am going to give you some numbers. I'm trying to see which year should I give you. Let's give you this one. So, a little background. This is a married filing joint chiropractor. Married filing joint chiropractor, sole shareholder is the chiropractor. Looks like, don't ask me about this, if he was a C Corp or what, but I don't think he was a C Corp, but they have him date incorporated September 2006. But he elected S Corp January 1st, 2019. He grossed 612,154, 612,154. He had total deductions 551,390. Oh, I forgot his comp. Okay, not terrible. 66,000 reasonable compensation. I would say reasonable comp. And his gross income Sorry, net, 57,310. I know Jackie likes to know, she's not here, but she likes to know distribution. Let me see if he had any. Oh, you're laughing. Yes, you remember. So in this case, yes, nobody knows, but in this is a 2020 tax return, 296,774 of distribution. 294,774. $296,774. This is supposed to make you mad. Because when I see stuff like this, I'm mad. No, this is doing the bookkeeping. Yes, that's the one. The one that didn't know he was doing profit first. He knew he's doing profit first. The client knows he's doing, because somebody told him about profit first. So profit first is a methodology to, how do you explain it? Like it's a Dave Ramsey envelope method on steroids, right? It's a better way of managing your cash flow. So this client knew he elected to do this profit first, to implement this, but he didn't tell the bookkeeper who's in India. And has no idea about why something is in one bank account, that bank account, that bank. So all of it is distribution. They did, because we're all day asking for bank accounts, and all of a sudden 8 bank accounts appear. This client has all this money, but they don't know what it is. It doesn't look like a business expense, so it must be distribution. Yeah, so he has huge money leaking out of his business. He's probably overpaying taxes because, Oh, sorry. Yeah. 612,154. So the original question is, S Corp or not? I know. I'm gonna tell you why I fired him. Yes, you guys see this. And I apologize, it's because I didn't redact, so I couldn't just throw it up, but so we put Timlin to work. I fired him because he kept picking our brains for free to tell his offshore bookkeeper what to do. And we were cordial and nice in the beginning. Lynette wrote these beautiful paragraphs telling them this and that, and that's why this number is, and this doesn't look right to me. But eventually we saw what he was doing, and it was just like, see ya. Hate to be ya. I'm not your accountant anymore. Well, we kept saying, we're not your accountant, we're your tax preparer. It's different. If you want somebody else to be your bookkeeper, that's fine, all day, all night. S Corp or not? Let's say this was on a Schedule C, right? 612, well, obviously add back the 66,000. So if he has the basis, which no one was tracking. Oh, I got you, right. So on that gross, right, he would have 612, but his net income, you should be looking at the 57,000. That's what it. But we don't even know if that's right. That's the problem. But that's cash, not necessarily income. See, and that's the other thing a lot of practitioners don't look at. What's cash? What's income? Yeah, but who knows when that was earned? That could have been cash sitting there for. Oh, so he also has a partnership that he created with his parents so that he can push profit to them and less to him. Because, this year, let's allocate 30% to you, only 10 to me, because they're in a lower tax bracket kind of thing. And he's self-rental. So rental. So the commercial property that's in the partnership is what he rents to do his chiropractic work. Self-rental at lower than fair market value, if you can imagine. And he was putting it on a Schedule E, though. Yes, so he's defeating the purpose. Like I didn't understand the whole thing with the partnership. And this is another reason why when I was pointing out about electing the S corp, we have clients who do that. They put rental property in S corp and then they don't know how to get the money out or they're not doing it right, kind of thing. That was the point of this one. Yeah. So, I mean, I think he should be an S corp. Honestly, go ahead.
It's making my head hurt.
Yes. Mm-hmm. Oh, I didn't prepare the. We did the preparation after his tax plan. I did it. Actually, he had somebody else do his tax plan, but he's very needy, and they probably got sick of him, and so he came to me. I said, okay, I'll look it over. I wanted to look over his tax plan. I charged him $3,000 to look over his tax plan to explain to him what they were telling him, and that's why we took it. And then the following year, when we did the taxes, that's when we started noticing all the problems because we didn't know what his books were like. I was just straight up looking at his plan. But sometimes he's a nickel and dimer. He was cheap. He didn't want to pay. He just want to call you all day, all night. That's see that resonated. She remembered that number. That's crazy, and that's. Mm-hmm. Yeah. Yeah. Was it a good idea to make it? Because why? Why? Well, the question. Well, okay, so the gross is 612. We don't really know about those deductions. That 551 because his bookkeeper, to me, was not knowledgeable. And as Lynette said, there were hidden bank accounts. There were all kinds of things going on there that we didn't know about. Yeah, I hear you. Because 50, and I 100,000% agree with you in the sense that I'm more of the pushing six figures before I would elect S corp, because he didn't like the price on the part. He wanted me to do partnership. I said $1,200 minimum because he asked too many questions, and it was just the one rental property in that partnership. But then when he started switching up the allocations and stuff, and he didn't have an agreement. By the way, I did a partnership boot camp last year, 4 days. That's dry too, oh gosh. But what I got out of it is that partnerships are so flexible. Like this time I can say 30, 30, and 40, whatever, to make the 100%. You can do, and next time do 80, you can change. But an S Corp cannot do that. But I see people playing around with that S Corp shareholder allocation too. Yeah, they do it. Yeah. So distributions in an S corporation could be money you've accumulated over time. That's your basis. So as you have basis, you don't. So the IRS is going to tax you on your profit, whether you take the money out or not. So some people can just earn and earn and earn and not take it. So, but we feel that 296 is not correct. Him? No. Chiropractor. He has a real estate partnership. Yeah. Oh, 66,000. No, so he had payroll, whoever. Yeah, but he didn't do it himself. So somebody smart enough gave him that payroll. He didn't want to pay that. Trust me. He didn't want to pay. Yes. It could be what we're saying. Yeah, we could be. So we're not going to swear to it here. The books are still in. That's why we fired him, because he was kind of using Lynette. He was just kept asking because she was generous with her explanations, and he just started taking advantage. So he had to go. Okay, one more. I know we're kind of coming to the end of this particular section. One more. I'm gonna. I think I have her. What's that? 10 minutes? 10 minutes. Okay. Do I owe anybody anything? I answered all the questions. 10 minutes, 10 minutes. Okay. I'm going to look at an individual tax return. And then I'm going to tell you what this client did. This is a Schedule C. I'll tell you what kind of business she is. She's a mental health counselor or a therapist. She didn't ask me a question, a single question. And she did an 8832 to be a C Corp. Treat me like a C Corp. Why you laugh? Treat me like a C Corp. And then she went and she elected S. But she did the wrong year. Where's her? Come on, Schedule C, where are you? Bear with me, I'm gonna find it. Oh, it ended up being a Schedule C EZ. That's why I skipped past it. So that should already tell you something. She had gross receipts of $4,800. Total expenses, $462. With no K at the end. No, all of these are just dollars. $4,800 gross receipts, $462 total expenses, net profit $4,338. She is an LLC, but she didn't go right to the S corp. She did an 8832 to be a C corp first, and she did it for. She didn't go. Something was wrong with her year. I can't remember her details, but this is easy. S corp. And then she gets mad when I even want to charge her for this S corp return. Jamie does her taxes now. I don't know if Jamie fired her yet because I fired her. Well, she didn't like my prices, so she left because it's too much. See? That's what I'm saying. So Jamie, this is another CPA. She got the case and she said, but Angie's prices are very nice. So she expected her to charge her less than that. Wasn't going to happen. I don't know if she ended up doing it. So I think that one is easy, right? But she already did it. So she's in this further, she's on Social Security disability income. So the last one I did, yes, caused her to pay some taxes because she earned more than she's supposed to earn at that. So she was mad, and I said to her, well, don't make any money. That's the only, you cannot keep both. You cannot make a lot of money and be on disability income. Pick one, please. And that's it. So, all right, I think I've had my time. I bored you enough. Oh, a question, come on. Yes. So the 88, people think when you elect S Corp, first of all, you can't elect S Corp. We already talked about that unless you're an entity, a registered LLC, MMLLC, or a C Corporation. That's one. Second of all, if you're going to elect S Corp, you do not need to do an 8832. The 8832, bless you, is switching your entity structure for some other reason. Example, let's say I am a single member LLC. I elect S Corp. directly. Forget about the 8832. And then, oh, times got hard. I'm not making any money. I want to go back. I revoke and we go back. You're automatically a C Corp, so you have to do that 8832 to switch your entity back to the minds of the IRS. Otherwise, they're going to see you as a C corporation. It's just the rule. It's just a rule. You already changed that 8830, that 2553 automatically changed you to a C corporation. You can't do anything about it. You're a corporation in the eyes of the IRS, not statutorily. That's a different thing. And you have to look at that. That's why we work with attorneys. Your EAs, CPAs, you shouldn't be doing that kind of, you can tell them, hey, I think you should talk to an attorney, but this is something that you may decide you want to do with the state as well. Another example, if you're a multi-member LLC or partnership and you're like, this guy just left, or I don't want to work with him anymore. And now you're a single member LLC and your EIN is a certain way. Like I have to do an 8832 to switch back to an SMLLC. Because this particular one, I know why. She had to change her EIN and she didn't want to change her EIN. So I had to make her EIN not be a partnership to the IRS anymore, but to make her back to her single member LLC because she also was a medical practitioner. And so to change all of those contracts is a nightmare with insurance, Cigna, Aetna, all of these. So let's keep the EIN. So we had to do an 8832. That's another reason why you would do that. Change your entity structure. Okay, any more questions? We can always answer later, but I hope that kind of gives you some, go on, come on. So CPAs forming LLCs for clients, in my opinion, and from my knowledge, is a no-no. It's practicing law. And I'm under the understanding that EAs can do it. I think I've heard that before, but it's not advised. Depends on the state? Gotcha. Just like in some, you can, Tennessee. So yeah, that makes sense. So that's another important thing. Know the rules for your particular credential in your particular state. So just like some states, you can't call yourself accounting in your name unless you're a CPA, right? Some states you have to be a PC or a PLLC, those types of things. So you have to be aware of all of that and what you're advising clients, right? Thank you so much for part one. I know hope I didn't kill you too much on, on our S-Corps. All right. So we went through part one, and I just want to make sure we covered the objectives, which were, we learned what an S-Corp election is. It is not an entity, it's a tax treatment, just so we get that really clear. And as these taxpayers come with their representation cases or their planning cases, we have to make sure we fully understand what the S-Corp means. So we touched on that. We learned why taxpayers may make this election. A lot of them just want to save the self-employment tax, but it may or may not be appropriate for them, as you can see by some of the examples. Too early, too late, or time to get over that. You've been there, S-Corp, too long, time to get out. We learned what could go wrong when election is not done correctly. So practitioners put them in these S-Corp statuses and then they ghost them, or we don't do that, or you implement it yourself. And so problems come out of that. We learned about the requirements, who can be a shareholder, what we can do to make sure that this S-Corp is in compliance. If you get audited, things can happen. And we learned what happens when the election ends. Hey, you're automatically a C corporation. And if you don't like that, you're going to have to do your Form 8832, switch back to wherever, and so forth. And so just want to make sure that we've hit all those objectives. And of course, give us your feedback on the survey, and then we'll be good to go. Let's talk about some potential red flags with the S corporation. We already named a few of them. No reasonable compensation. So when here's a good one. So here's this client. What would you do? This client gives us, look, I'm your preparer. I'm not your accountant. Don't give me access to your QuickBooks. Print me a P&L and send it over, no problem, a balance sheet, ready to go. Don't give me access unless I ask you for it for some other reason and you're gonna pay me to go through it. Okay, so I have a P&L. I have an owner's compensation of $35,000. Nothing else, no wages, no nothing. I go and I prepare my 1120S according to the P&L, no problem. It was below 250, I don't have a balance sheet, I'm not worried, okay? I give the client, I think they're in a net loss or a very low profit or whatever. First of all, they shouldn't be an S corp, but we're not gonna go there. We already talked about that. Client looks at the return, reviews it, comes back to me. I don't see the $15,000 that I pay that other guy. Okay, first of all, it wasn't on the P&L. Second of all, where's your 940? Third of all, where's your W-3? Oh, I don't understand why I have to give you that. First of all, I don't know where it is. First of all, they don't know who their provider is. Don't ask me how they don't know that. And I said, well, I need that. You're supposed to reconcile these things. How many practitioners do I know do not do that? They do not do that. They don't ask. You should do that. I sent them. This client kept going back and forth to me. You know what this client said to me? If I give you that and all the information, I might as well do my own tax return. That's what that client said to me. Bye-bye. Knock yourself out. And the mere fact that you asked me that question, why do I have to give you that and so forth, shows that you need a practitioner. Because you didn't even know you had to reconcile these things. Your P&L, at least if your P&L had the $15,000 on it, I would know that you know what you're doing. Or kind of have an idea, but you don't see that so guess what? They sent me a new P&L with the $15,000. I said, I'm not doing it. You show me a government issued form with that extra $50,000, I'll gladly give you the deduction. And they're just arguing. So you know what? The IRS has a video on their site. I show this to my business owners all the time. Watch this video. I show them why those things need to match. It's a 20-minute video. Go watch it. And so I saw some email come in, but I didn't read it. We're in Jamaica. No time to think about that. So that's a red flag. Yes. Oh, okay. I will give you that link. That's a great link to have. It has for not-for-profits. It has if you're self-employed, a whole bunch of videos on different topics. Even if you need an OIC, that's in there too. How to fill out the different forms. Because a lot of these taxpayers... A lot of taxpayers start businesses. What? LLC over there. How many LLCs do they form? And they come into you. They don't have no idea what state they were in. Do they owe that state? Why do I have to do that? Yeah. And they want to get mad at you when you advise that you. Okay, thank you. But they do form them all over the place and make you crazy. So yes, so that's another one. So not tracking basis, again, that's another red flag. Every time I cringe when I don't see distributions because I'm like, how do you live? Like some of them are not married. There's no other money coming in on any other kind of business. I'm just like, there's no reasonable comp. There's just deductions. But how do you live? So I know they're taking distributions. They're just not telling you, right? They're taking money out willy-nilly out. Some of them are they're way above basis. And the thing is, they don't realize that that's creating a capital gain. You're liquidating the business at this point. And they don't understand. Exactly. All right, so when we correct the audit issue, number one, did we get that acceptance? Every time somebody comes, so you have your checklist ready or organizer when you're getting ready to do an S Corp tax return. Hey, give me your acceptance letter, number one. Where's your EIN number? Some people don't know, these people do not know their EIN number. I told you about that lady, she has 3 EIN numbers for the same business. Some of you can't get any, this one give me 3. And the state knows of different ones. I don't get it. So, and they're still not, and they're still paying too much. So did this S Corp work for them or not? So correcting is so automatically getting those things. If they have it, basis schedules, right? I want to see fixed assets listings. I want to see prior returns, right? And then I interview, I kind of ask some questions and say, do you really need this escrow? You know, it depends, right? So I will see. As I want to make sure they understand. You don't have an accountable plan? What's that? Well, you know, you can't deduct your home office like the way, oh, I thought I always got rent, and they put in rent, they put office expense, they put but with no accountable plan. If you get audited, that is a problem. And I promise you, the first thing the IRS is going to look at is basis. They're going to ask you if you're tracking it, and they're going to ask for this accountable plan or any policies that we supposedly have in place that we're using in our business. So I mentioned this before with the prior example with the restaurant. I asked her for what was she trying to, first of all, she didn't have any inventory, that was the other thing, but you're a restaurant. And I asked Olga, I told Olga, I went there, I filmed. I mean, there's pots, there's like 4 refrigerators. I don't even know if they're fully depreciated. I don't even think she knows how she paid for them, or so they just kind of end up there. But those are things that are important. And this client is likely overpaying taxes because it's not just the evasion part. It's the part they're not maximizing their savings. And when you tell them that way, that kind of encourages them to do the right thing. So we may be dealing with the underreporting unit. We're going to be dealing with ACS. This may be a Social Security problem, and it could also be on the S-Corp side. So I had a chiropractor client, married filing joint, owed $235,000 to the IRS. 199 or so of it was on the individual side, and 35,000 of it was on the business side. I was like, well, how is this escrow? She doesn't even know, but somehow either late filing fees, but we never file late. We never file. So how do you owe 35,000? It could be trust fund. So trust fund is when you have payroll, because they've had employees, receptionists, and so forth. So whatever. When I did the offer, just so you know, you have to do a 433A OIC on the individual side, and then you have to do the 433B on the business side. And the IRS will not even consider that offer without looking at the business numbers. So just pointing that out to when you do representation work on an S-Corp. Correct the other, let me see, other issue. Anything else you can think of with an S-Corp when we're auditing, when they're selected for audit, or have you worked with any cases on the S-Corp side? Anything else? Disaster. See, it's because, right, the IRS probably, they're not seeing it, right? They're seeing the maybe he didn't show the profit, right? And then that's when you pay the taxes, and then that adds to your basis. But if you're not tracking it, I see, yeah, that's it, yeah. Oh, now the truth comes out, got it. Oh, this is not good. Yeah. You see? Oh, yeah, well, wow. You see, some of them have say it again? Eh, Oh, yeah. Yes. I agree. Yeah, it's true. So, who works for the IRS? So the revenue agent, he just happens to have one who's going to work with him. So that could make a difference in how much you pay too. The revenue agent, some of them are arrogant. Some of them are really mean. I think I was successful in one of my offers because my taxpayer rights were so violated. And I wrote me a letter with several paragraphs of every single taxpayer right I felt was violated. From the time From the time I talked to that revenue officer, he tried to turn me against my client. Your client's lying to you. This was an auto dealership, and the auto dealership, he lost his business once the IRS started knocking and so forth. He lost his lease, he lost his business. So the revenue officer, I said, he doesn't work anymore, so I'm trying to get me an offer here. This guy owes almost $500,000. And the RO said, oh, he's lying to you. I visited and I saw activity there. Now, I'm new to this client. I don't know. So I get on the phone with my client. I said, you better not be lying to me. I can't help you if you lie. What lie? I'm not lying. I subletted that place and had somebody else working there. So I'm just like, okay, so he gave me an answer. So now I start questioning my RO. And now I start listening to my client a little bit more and working his case. We settled at $20,000. That RO wanted him to sign over. He refinanced this house and took out, he had a check of $170,000 in his hand, and the IRS wanted him to sign it over to them because he owed $500,000, right? And they wanted that. Oh, we're first priority. I said, no, he took that money out to pay off a mortgage on a rental property. By the way, this guy's had equity. He had, property, he had his own home and whatever. So people told me, you're not gonna get an offer for this guy. For like everything you read, that's why I say every case is different. You gotta look at these cases. And you better believe I was gonna try anyway. And I tried, and the RO had, the revenue officer did not want him to have an offer. He says, well, if you put in that offer, I'm gonna fight it. I'm gonna go upstairs to whomever, what your offer specialist, and I'm gonna fight my case. When I got that offer specialist on the phone, she was like, when I was an RO, I didn't do those things. Who works at the IRS? People. And I got her on my side right away. And I told her all the things he did. And I said, we're right to a speedy, whatever. So originally when he hired me, it was for an audit reconsideration. And what happened was, I'm like, what you gonna have them reconsider? Your books are a mess. You have nothing. By the way, same accountant as our restaurant lady. He comes with a shoebox. He comes in and this guy just spoils them and just puts together a Schedule C tax return. And he grossed like $800,000 on a Schedule C. So no real advising, nothing. And so I was gonna fight. I charged him $8,800 for that case. And he gladly paid because he had cash flow. And so when I talked to the revenue officer, he was like, I want that check turned over. I said no, but when I got to the offer specialist, she listened. And she was very pleasant. And let me tell you, when you want to get IRS to do what you want them to do, you have to be very nice. Don't argue. Be firm, because they will try to railroad you, but you should also put your foot down and advocate for your client. Don't be a wimp, but come with facts. Come with some sob story too, because sob story works, right? And so that's what that whole letter, and by the way, that $170,000, I dumbed it down. My client is 69 years old, the wife was 64, a retirement government worker. I did a nice chart. I started with 170, but then by the time the 5 years, I spent out their monthly living expenses over 5 years. And I dumbed that money down to probably $20,000 or a little less, and they took the $20,000 offer. I did 19 for him and 1,000 for the wife, because 1 year she was like married, filing separate or whatever, and so that made it go away. And the end, and we won that case, but probably took almost 2 years because it was pandemic also, but we won that case. So don't be afraid to fight. Use everything in the arsenal. Soft skills matter. Don't look at only the technical stuff and, oh, the formula says no offer. Fight it. All right? Because death, divorce, disaster, all those matter. So somebody in Nashville asked me, oh, what would you do with this case? Da, da, da. I don't think they're going to qualify. Well, what's their story? I don't know. Well, how did they get out of compliance? I don't know. Well, we got to ask. Sure enough, he comes back later. Oh, the daughter is disabled in a car accident. You hear all the story now. Well, dude, that's your offer right there. Special circumstances. Don't listen to people. Work your case. All right. What else on the correcting the audit issues? I think those are pretty much your units. I talked about the underreporting unit, collections. If you need an who? You can penalty abate. So if it's an underlying part, try. All they can say is no. Oh, first time. So let's say somebody is out of compliance. I haven't filed in 4 years because guess what? They elected S corp. They didn't know what to do. Get those. So they've been Schedule C all the time. Oh, easy peasy peasy. S corp, huh? So now you see they gross, and let's say all right, so legitimate. It makes sense to be an S corp, and now you had to go back 3 years. They allow you to go back 3 years late. So maybe sometimes I have to estimate. I estimate, but guess what? I'm going to hit penalty maximum 2,400, 2,400, right? 25, huh? Yeah, so 200 per each shareholder per month or partial month to the max of 2,400. So I'm going to get hit, boom, first time penalty abate, get rid of that. Hey, but if I have a reasonable cause, now I can start saying, well, bad advice from the practitioner, new to business is a good one. I didn't know what the heck I was doing. I lost my paperwork, whatever. Come up with your story. The worst thing they can say is no. Okay, we gotta know, what do we do now? Installment. So Lynette was like, well, last time we did this, how did you know to do it this time? Because wherever the fire is burning, you gotta put that fire out. So we had a guy paying $770 a month in an installment agreement. You can barely rub 2 pennies together. So usually we have our flow that we go, 433. But she said, how did you know to do the 433 first versus, doing some of the planning, the pulling out the transcripts, and because he's out of compliance in some things, and you try to do, because he cannot find 770. We need to stop it. Well, you can't pay us. So we stopped the 770. So we at least got it down to 144 a month. So we did that. So that's a temporary solution until we figure out what else we have to do. Then we have to file this, file that, get him back into compliance, and decide. This was one of the cases where the practitioner filed a Schedule C and an S corp for the same income. Yeah. A credentialed practitioner filed a Schedule C and an S corp the same year. But exactly, that's my point, people. Yes. And so that's one. Okay, so that's enough on correcting some audit issues, because I want to give you quick planning strategies when S corp is a great idea. Great idea. Personally, I feel if you have an S corp and you have underage children and a spouse who you're going to have in your business, I would keep that. I would have a family management LLC, because you're going to maximize the savings when you hire your children down on your 1040. Well, how does that work? Well, got an attorney. We can get a nice agreement between the family management LLC and the S corp. So they're going to do the administrative stuff. They're going to post on Facebook and whatever they can do for you, whatever, shred this, shred that, file that, enter this here. They're going to do that, and you're going to pay them. But the S corp is going to pay the family management LLC, and then the family LLC is going to pay the children. That's how that moves. That money has to follow that audit trail from the business bank account S corp to the business bank account SMLC to the children's bank account. So children has to have their own bank account as well. And I'll not steal Timbaland's thunder. She's going to talk more about hiring family members. But yeah, so that's how that works. And then again, there's some question as to the documentation, how that should look and so forth. But as long as the paper trail is there, I've been in audits with this, and the IRS understands you hire your family members. A lot of times I talk to things where I've been in the audit. and I know what's going to happen over there, so I don't feel like I have to be perfect on this side. That's why I see. Who works at the IRS? People. And let me tell you, who are practitioners? People. So it's as good as your skill. So your soft skills are going to really matter, because just saying good morning. Hi, Mr. Smith. I'm calling on the power of attorney for XYZ client. Oh, good. Sometimes they're like grumpy right away, but you just kind of work. Don't be overly nice if he's not nice, because he's going to hear your fluff anyway. But I've had at least 3 agents tell me, it was a pleasure to work with you. You're so professional. Thank you. Because what do they want you to do? Close their case as quickly as possible. And I'm telling that to you because Jackie knows about ROI. The quicker you turn your engagements around, the more it is in your pocket. Otherwise, emotionally, you're going to be drained, and then you didn't make any money off the case because you just spun your wheels so long. And listen, if they don't put your pencils down, if they stop responding, they stop paying, why are we giving all our energy and time to these people when they don't even care? You can't care more than they do. So those are some things, right? So quickly on the strategy side, that was one, having your family member LLC. If you're going to hire a spouse, by the way, you can hire a parent. There are different rules for these family members, and the IRS has a site, Family Help, and they'll tell you some more about that. But know your state laws too, and your state standard deductions and all that. People keep forgetting about the state. I remember when I got into this and I was looking at the state, and I was like, oh, better look at the state. Augusta rule is a great one, right? We already know about Augusta rule. We can rent a space out of our own home at least 14 times, because every taxpayer has 14 days or fewer that we can rent from ourselves tax-free. Money in your pocket. Deduction for the business, tax-free money for the individual. So we know about that one. So chiropractor client did that. That's the one I shared in the first example. He had commercial property in a partnership with his parents. His chiropractic business was paying that partnership for the rent. And then he turned around and he put it on his Schedule E, which I'm like, oh God, what are you doing? But I've heard other practitioners tell me, well, you got to issue a 1099. And if you issue the 1099, now it has to be on a schedule. I said, but clearly on the IRS site, and I can send you the link, it says, do not issue a 1099. But people still do it. Because then they start thinking about the state. I said, well, let the state ask. Because if they don't see a 1099, they don't know. But let the state ask, because generally speaking, most states follow the federal tax return anyway. Exactly. And they make the adjustment on the AGI. Correct. Yes. So that's another one. Retirement, we talked about how to do, step IRAs, but look at what's best. So, I don't think you can do a solo 401k, but you can do other things. So I want you to look at retirement as a great benefit. Maximizing deductions, travel. Hey, I want to go to Jamaica. Okay, so now we're going to figure out how the heck can I get to Jamaica tax-free? So I encourage my taxpayers to look at the business first. Your primary reason for going anywhere should be business. So I tell people, don't be greedy. If you want to go to Australia for fun, go to Australia for fun. Why do you have to do something business all the time? Everybody just want to deduct. I have taxpayers who have reached retirement age and have nothing in Social Security. Nothing. You need 10 years or 40 quarters to qualify for Medicare and Social Security. But sadly, people born and raised in this country have none, because they've been self-employed all their life and they deduct till they're in net losses and don't want to pay into the system. Off the books, zero profit, all of that. And it just doesn't make any sense, and it's a lack of knowledge. So as an advisor, you want to tell them, hey, pay some tax. And pretty much that's it. And then we don't have time for a case study per se, but I'll let, when Jackie speaks, she's going to give you some of her things on that, some planning strategies. May or may not include S Corp, but still from a business standpoint. Okay? And so what did we do? I wanted you to know what a fringe benefit is. So we're summarizing our objectives because this is in relation to our part 2 of our S Corp. Our objectives were to understand what fringe benefits are and what you can and cannot deduct. We learned that we don't know it all. We can't possibly know it all. You must at least have a checklist. Hey, retirement, health insurance, tuition reimbursement, this and that. You got to look at what's taxable, what's not to the 2% or greater shareholder. So many people miss this. And in the platform, I think I showed you that case. You guys can go into the original case study where I had a practitioner elect S Corp, made the business passive by saying it didn't materially participate. There was no QBI, and it assessed an NIIT. So that client literally paid over $100,000 more than she had to in taxes. The husband almost fell off his chair, literally. Because when I saw them on the Zoom, he was just like shaking his head. All by not checking a simple box to say I materially participated, and then I also say, subject to self-employment, and QBI business, 199. I see this. I'm amending it. I'm still in the process. I amended. So I asked them if they want the prior practitioner to do it. The husband was like, no. The woman was like, because I'm telling her it's going to cost you if I do it. But it's in her software. I happen to have used Pro Series, which she was using. I'm on UltraTax now, but she was using Pro Series, and I recognized it, and I said, do we like this lady? She says, she's a nice girl. Get her on the Zoom. I'm going to teach her, because she's doing that to other people. And so we got on, and I showed her what she did incorrectly, and how when it moved over to the 1040, she didn't check materially participated, and then it made it passive. And so we fixed that in 28. But guess what? This is 3 years, because when did the reform come out, right? So for 18, 19, and 20, all 3 years have to be amended. And it's bad. So, but she created an app and didn't get any R&D. So we're going to add some R&D. Well, this year things are kind of, we talked about R&D is terrible this year. But still, she has some other benefits, reason to amend anyway. So I did a tax plan for her. And so, that was ugly. That was not a nice case. But guess what? I didn't even finish the tax plan, and I gave her back so much money from just that little interview. So, so that was a great one. There's more in there if you guys care to see S Corps, but they're interesting. Sometimes revoking the S Corp is good. I have taxpayer in a 33% tax bracket versus their flat. I showed her both ways. I showed her, if you were a C Corp, this is what you would have paid. Extension to, Yeah, so you do, and sometimes you have to just do it to see, because you got to weigh in the penalty, weigh in the extra cost of doing this or that, looking at the effort of, hey, am I partial year S Corp and then a partial year C Corp? By the way, it's going to reject because you can't use the same EIN, right? Once you file that S Corp, the C Corp is going to reject. You can potentially abate that first time penalty, especially if this is late, the C Corp you end up choosing. So all of that has to be thought about. So you're right. It's like you can't just say, let's elect S Corp, and now it's August 15th. And now they don't realize you have partial year stuff to do. That's the point. Yes, so there are deadlines, right? So obviously we know March 15th and so forth. So 2.5 months, right? You have to look at all of that. So, I have a client, so this one, so this was the rental property. He has 8 rental properties in an S Corp and doesn't know how to get the money out. So I told him, we talked about this one. I think we need to revoke this. We're going to close that entity. I did a final S Corp return. And I'm telling you, it's better for you. First of all, the wife doesn't have a W-2. Here's my real estate professional. Why do we even need this S Corp? See what I'm saying? So people, we have to think, because no matter what I stand up here and tell you, you still have to go through the process of understanding that client and customizing what works for that client. Don't say, well, Angie said last week, she said to elect S Corp. No, it's not going to be the same for everybody. Just ask yourself a few questions about, does this make sense? And sometimes to learn, visual learners, right? Sometimes you just have to do it both ways and see which one worked better. Because when I did that for this $1 million earner, she's a public speaker, she's a public figure, an influencer, if you will. Like, she's been on The View and some of these channels. And she comes to me, I'm like, why are you not a C Corp? You really should consider this, because you are paying so much tax. Plus, you're going over your basis. You're not even doing that right. I'm telling her, so she's taking out so much money. And I said, if you were a C Corp, this would be so much better for you. I can tell you more tax-free ways to get out of that C Corp than that S Corp, because you won't be saddled down with those fringe benefit rules. So again, think. And so, yeah, look at your case. Go back and look at some of your S Corps. You might shock yourself. Yeah. All right, so that was my reiteration, right? We talked about the fringe benefits, we talked about potential red flags, and how to resolve some cases and some types of issues when they come up. All right, and thank you again for part 2.